Precision English for Markets, Vols and Implied Volume Clarity. Welcome! In this quick session, you'll learn to speak clearly and confidently about volatility on client calls. We'll turn trader shorthand into precise, professional phrases you can use immediately. You'll practice language for realized volume, implied volume (IV), and how to compare levels without hedging your words. Finally, we'll script smooth confirmations so you sound calm under pressure when executing or discussing trades. By the end, you'll have a compact toolkit to explain views, quote markets, and close with clarity. No jargon overload, just practical lines you can lift and use today. First, definitions. Volume usually means realized volatility, the actual variability of returns observed in the past. It's what the market has already delivered. Implied volatility, IV, is the market's forecast of future volatility, backed out from option prices. When IV rises, options generally get pricier because the market expects bigger moves. But pricier doesn't always mean riskier for your client. It might reflect an upcoming event or simply demand/supply imbalances. Use IV to talk about expectations and realized volume to ground the conversation in what actually happened. Use crisp, factual lines. Example: realized volume has trended up to 12% over the last month. That anchors the client in observed movement. For options, try 30-day IV screens at 15%, below its 6-month average. This quickly signals relative value. When describing the curve, say, term structure is flat between 1 and 3 months, or steep into 6 months, or inverted around the front. Each phrase tells the client not just the level, but how volatility is distributed across tenors, guiding strike and maturity choices. Frame relationships cleanly. IV is 3 vols over realized. This highlights the spread between expectations and history. To reference context, use it's trading rich versus the 1-year percentile, or cheap versus the 1-year percentile. That compares today to its own distribution, not your opinion. For surface shape, say, skew is bid, wings are firm, meaning downside protection or tails are in demand. Alternatively, skew is soft, wings are loose, suggesting less demand and potential relative value for hedges or tail trades. Lead with the essentials in order: tenor, strike, volume. Example: 3-month, 25 delta put, 17 volume. Then anchor expectations. We're showing 16.5 to 17.5 volume. Ranges acknowledge market width and reduce haggling. When the client leans in, close cleanly. Can I confirm 17 volume for 5 million notional? If needed, add premium or price. That price is at 2.1% premium. Can I confirm? This sequence keeps the call tidy, reduces mishearing, and speeds time to yes or no. Explain why a trade makes sense. Try, IV compensates for move risk here, or IV doesn't compensate for the likely move. Around catalysts, use event premium into FOMC looks elevated, or earnings volatility is partially priced. For holding costs, say, carry is positive on this structure, meaning theta/vega dynamics favor holding, or carry is negative, signaling it's costly unless you expect a move. These lines shift you from quoting to advising, showing you understand both pricing and risk drivers. Keep control politely. Use precision prompts. To be precise, you're asking for Then restate tenor, strike, and side. Narrow preferences. Color on your strike or tenor preference. That prevents rework. When negotiating, set the market first. Market is 70 to 90 wide. Can you meet at mid? This frames fairness and invites compromise. If details drift, reset. Let me confirm parameters before I price. These lines protect you from misunderstandings and help clients feel guided, not challenged. Quick recap: realized versus implied, history versus expectation, term structure, how IV changes across maturities, skew, relative pricing of out-of-the-money puts and calls, the wings. Confirm in this order: tenor, strike, volume, and range, then size. Mini drill. Say out loud one clean confirmation. For example, 3-month 25 delta put at 17 volume, showing 16.5 to 17.5. Can I confirm 17 volume for 5 million notional? Repeat with a different tenor or strike. Aim for steady pace, firm tone, and zero filler.